our perspective, the crypto winter ended the moment that the SEC approved the Bitcoin ETF. And suddenly the interest and momentum from institutional allocators into the asset class was back on. And there are a couple trends that I think should be noted. So one trend is that for several years, we had not seen liquid strategies raise capital. And in 2024, we're seeing more of a pivot back to liquid strategies. I think this is very similar to what you're seeing in traditional finance, that we're seeing a little bit of a pivot back to liquid equity strategies, public equity strategies as well. That doesn't mean that closed-end crypto strategies are gone. They're still very robust, but the trend towards more liquid strategies seems pretty clear. So I think also when you're thinking about raising institutional capital for a crypto fund strategy, you're looking at traditional institutional allocators, certainly some pensions, endowments, et cetera. But you're also looking at some unique allocators that are unique to this asset class. So one that should not be overlooked is protocol-tied allocators, foundation-tied allocators. And this often entails what we generally refer to as an ecosystem fund, meaning the protocol, the foundation around the protocol has capital, or more typically tokens, to invest in a fund that contributes and builds on the ecosystem around that protocol and around those tokens. Another source of capital that's unique is capital that comes from a DAO. And we're seeing this increasingly. I would note that if you're accepting capital from a DAO, there probably are some unique considerations you have to think about in terms of who is your investor, how is it governed, and making sure that the fund protects itself from any potential governance issues in a DAO. Let's talk about track record a little bit. So I think track records of this asset class can be a bit of a mixed bag, meaning that there have been clear periods of outsized returns, 2017, for example, clear periods of depressed returns, 2018, for example, or 2022, 2023. It's not 100% clear how all of these things work together from an institutional allocator perspective. All of those periods of growth, I think, from an allocator's perspective, are probably viewed quite differently. So if your only positive track record is a very early track record, pre-2018, that's probably not a great track record to market to an allocator. They're going to be looking at how the fund did in periods of price depression, price decline, and then how they did it relatively in the various bull markets.